In the cutthroat world of Wall Street, Maria Chen was told, emotional women can't manage major investment strategies and relegated to support roles. Her comprehensive risk analysis predicting market collapse was dismissed by her boss as too pessimistic. When the global economic crisis erupted, the firm lost billions, and Maria's secretly prepared recovery strategy became their only hope. Now her boss, Jack Reynolds, was dependent on the very woman he had underestimated. But Maria had conditions, and her boss had no choice but to accept them. Maria Chen arrived at Reynolds Capital Management at precisely 7:15 a.m., as she had done every morning for the past 6 years. The marble lobby of the 50-story financial tower gleamed under soft lighting, security guards nodding in recognition as she swept past. Unlike her male colleagues who wore their ambition like a badge, loud, demanding to be noticed, Maria had learned to keep hers carefully contained. Her Yale MBA and previous success at Goldman Sachs spoke volumes, but at Reynolds Capital, she had encountered a ceiling that her credentials couldn't seem to break through. In the elevator, she reviewed mental notes for the morning's executive meeting. For 3 months, she had been analyzing disturbing patterns in the mortgage-backed securities market. The numbers kept her awake at night, default rates climbing, questionable lending practices, massive risk exposure hidden in complex financial instruments, all pointing to a potential collapse that would dwarf anything the market had seen in decades. The executive floor was already buzzing when Maria arrived. Through glass walls, she could see the firm's leadership gathering in the main conference room. 6 men in expensive suits, led by CEO Jack Reynolds, whose reputation for brilliant but ruthless investment strategies had built the firm into a Wall Street powerhouse. Maria was not invited to these meetings. Despite managing a $2 billion portfolio with consistently strong returns, she remained classified as a senior analyst, while men with less experience and poorer performance records held coveted managing director titles. As the meeting concluded, Maria intercepted Jack Reynolds in the hallway. "Jack, I need 5 minutes. My analysis shows critical vulnerabilities in our mortgage-backed securities positions." Reynolds glanced at his watch. "Maria, we've been through this. The housing market is rock solid. Your models are too conservative." "The data doesn't support that conclusion," Maria persisted, opening her portfolio to show carefully constructed charts. "Default rates are accelerating. Our exposure is—" "That's enough," Reynolds cut her off. "This is why we keep you on analysis rather than strategy. You're brilliant with numbers, but too emotional about risk. Markets require confidence." Maria maintained her composure, though the dismissal stung. "This isn't emotion. It's mathematics." Reynolds sighed with practiced patience. "Look, stick to your Asian funds portfolio. That's where your expertise is valuable." He gestured to a passing male colleague. "Brian, walk with me. I want to discuss increasing our position in those AAA-rated mortgage packages we discussed." As they walked away, Maria heard Brian's enthusiastic response about once-in-a-lifetime returns. She closed her portfolio, face impassive but mind-racing. That evening, Maria made a decision. If Reynolds Capital wouldn't heed her warnings, she would prepare for the crash herself. Working late nights and weekends, she began developing an alternative investment strategy, one designed not just to weather the coming storm, but to capitalize on it. She called it Operation Phoenix, a comprehensive plan that required divesting from vulnerable positions and strategically shorting overvalued securities while acquiring undervalued assets that would surge during recovery. The plan was meticulous, considering variables that most analysts overlooked. For 6 months, Maria refined her strategy while watching the warning signs multiply. Housing prices plateaued, then began to drop. Default rates accelerated. Several smaller lenders collapsed. Yet Reynolds Capital, like most Wall Street firms, continued to double down on increasingly risky positions. Then came the day everything changed. Maria was monitoring the markets when the first major investment bank announced catastrophic losses in mortgage-backed securities. Within hours, markets worldwide began to plummet. The executive floor descended into chaos. Traders shouted into phones. Analysts huddled around terminals, faces pale with shock. Reynolds paced the trading floor, barking contradictory orders as the firm's positions collapsed in real time. Maria watched silently, feeling no satisfaction in being right. By closing bell, Reynolds' capital had lost over $4 billion, nearly 30% of its total value. And this was just the beginning. 3 days into the crisis, Reynolds called an emergency meeting of all department heads. Maria wasn't invited, despite her portfolio being one of the few still showing positive returns, thanks to defensive positions she'd taken against direct orders. She was preparing to leave when Jessica, Reynolds' assistant, appeared at her desk. "He wants to see you. Now." The executive conference room had transformed from a place of confident strategy to a war room. Haggard executives surrounded a table covered with printouts of devastating losses. Jack Reynolds looked like he'd aged a decade in 3 days. "Chen," Reynolds acknowledged her curtly, "your Asian markets portfolio is outperforming everything else." "How?" Maria met his gaze evenly. "I repositioned 3 months ago based on the risk analysis you dismissed." A heavy silence fell over the room. "What would you do now?" Reynolds finally asked, pride warring with desperation in his voice. Maria placed her portfolio on the table. "I have a comprehensive strategy. I call it Operation Phoenix." For the next hour, she outlined her plan, not just to survive the crash, but to emerge stronger. Her strategy identified specific opportunities hidden within the chaos, with precise timing for each move. The level of detail was staggering, covering every division of the firm with contingencies for multiple market scenarios. When she finished, Reynolds stared at her, then at the other executives. "Why weren't we looking at this months ago?" No one answered the rhetorical question. "Implement it," Reynolds ordered. "Every division follows Chen's direction until further notice." As the executives filed out, Reynolds gestured for Maria to stay. When they were alone, he sighed heavily. "You saw this coming. We should have listened." "Yes, you should have," Maria replied simply. "What do you need to make this work?" he asked. Maria had prepared for this moment. "Full director authority, access to all trading accounts, and when this is over, I want to be named managing partner with control of my own division." Reynolds looked startled. "That's unprecedented. The board would never. The alternative is bankruptcy within 30 days, Maria interrupted. "Those are my conditions." The next weeks were the most challenging of Maria's career. She directed a radical restructuring of the firm's positions, often working through the night. Some executives resisted her authority, but as her strategies began showing results while competitors collapsed, resistance faded. Maria became the calm center in the financial storm. Her direction was clear, decisive, and remarkably accurate in predicting market movements. Within 6 weeks, while most Wall Street firms faced bankruptcy or government bailouts, Reynolds' capital had stabilized. By the 3rd month, they were actually growing, acquiring distressed assets at pennies on the dollar. Financial media began noticing. "The Wall Street Miracle," read one headline. "Reynolds' capital defies market collapse." Jack Reynolds was called for interviews, where he carefully took credit for the firm's contrarian strategy. Maria didn't challenge the public narrative. She was focused on execution, not recognition. But within the firm, the power dynamics had irrevocably shifted. Everyone knew who was really steering the ship through the storm. 6 months after the crisis began, with markets still in turmoil but Reynolds' capital thriving, Maria was working late when Jack entered her office, formerly his office before she'd claimed it as her command center. "The board meeting is tomorrow," he said, placing a document on her desk. "I've recommended your appointment as managing partner with your own division, as agreed." Maria glanced at the paper. "Investment Innovation and Risk Strategy Division, directly reporting to the CEO." "Yes, you've earned it," Reynolds hesitated. "I was wrong about you, Chen. I made assumptions based on..." "Based on what?" Maria asked coolly. "My gender? My ethnicity? My careful analysis that you mistook for fear?" Reynolds had the grace to look uncomfortable. "All of it. I've spent my career trusting my gut over data when I should have been listening to people like you." Maria studied him. "This division. Will it have full autonomy on investment decisions?" Complete autonomy, Reynolds confirmed. The board has seen your results. No one will question your authority again. Maria finally allowed herself a small smile. Then I accept. There's something else, Reynolds added. I'm announcing my retirement next quarter. The board wants you on the shortlist for CEO. This did surprise her. That's quite a change in perspective, Reynolds shrugged. Crisis reveals character. Yours saved this company while mine nearly destroyed it. After he left, Maria stood at the window overlooking the city. She thought about all the meetings where her voice had been ignored, all the promotions that went to less qualified men, all the times she'd been advised to be less cautious and more confident, even when data supported her position. The crisis hadn't changed her. She'd always been capable, always seen what others missed. What changed was their perception and their willingness to listen. 1 year later, Maria Chen became the youngest CEO in Reynolds Capital history, soon renamed Chen Strategic Investments. Under her leadership, the firm established the market's most sophisticated risk analysis division and led the industry in promoting women to executive positions. When asked by Financial Times about her rapid rise, Maria gave an answer that became legendary on Wall Street. Success in finance isn't about fearlessness or aggression. It's about seeing what others miss, having the courage to act on it, and the patience to be proven right. Sometimes the most valuable perspective comes from those who have been overlooked. In the corner of her new office, Maria kept a framed copy of her original risk analysis, the one dismissed as too pessimistic. Next to it stood a photo of her immigrant parents who had sacrificed everything for her education, believing their daughter could succeed in a world that wasn't designed for her. They had been right. And now, finally, everyone else knew it too. If this story of hidden financial brilliance, finally recognized, resonated with you, hit that subscribe button now. Have you ever spotted a problem that others missed, only to be ignored until it was too late? Share your experiences in the comments below. We read every single one and love hearing your stories. What would you have done in Maria's position? Would you have given Reynolds a second chance? Let us know your thoughts. And don't forget to turn on notifications by clicking the bell icon so you never miss our weekly uploads of inspiring stories that challenge stereotypes and celebrate unexpected heroes.